Two questions in one. What do you think Ben Bernanke is going to say, excuse me, and what would you like him to say?
Well, the market would like to say we're going to print more money, as we just heard, but we don't think he is likely to announce that. It is just too big a step now. Inflation is too high in the U.S. to just turn on the printing presses again and just throw money at the economy. And what we'd like him to say is probably lay out the options and simply say that if things were to continue to deteriorate in the U.S., the Fed stands ready to act. And that could be in the form of printing more money or some other measures potentially.
Well, I mean, there has been suggestions that he's running out of tools, if you like, to tackle the problem. Is that true, or does he have plenty more to use against this?
Actually, he has quite a bit more to use. The Fed can print money, it can buy certain assets in the U.S., it can start buying stocks, it can buy starting houses, mortgages, and so forth. It's more that the government, in terms of fiscal stimulus, there we probably spend all our bullets so far. But in terms of monetary policy, there are still some options left on the table.
But some people, Fred, call this a medicated high, particularly for the US markets, because we see the reaction in the stock markets for this. And the time has come for the US economy really to suck it up and for people to deal with the pain and take it from there. Is there any truth in that, do you think, or does the economy still need a lot of support?
I think the U.S. still needs all the support it can get, essentially. There's still massive pressures on deleveraging. We have high unemployment, for example. A lot of Americans still out of jobs. So it's important for policymakers to do everything they can. And the big risk if you're a monetary policy official, Ben Bernanke or Trichet, for example, in Europe, is that an economy can spin into a depression or recession, very deep recession. You want to avoid that risk.
Just something you said there about I'm talking about demand for money. I mean, people are deleveraging, as you said. Even if borrowing costs are low, people aren't necessarily going to start spending more, are they? They need to deleverage first. So you're pushing on a piece of string in a way.
In a way you are, but if you push really hard on the string, sometimes you end up pushing it. And I think the theory here is that, yes, the demand for money is very low, but that means perhaps the Fed has to be all the more aggressive in doing something. You know, we tend to have this view that the entire American economy is on its back, but really 90% of Americans still pay their mortgages. We still have a lot of people who would potentially buy a house if the mortgage rates came down just a little bit more. So at the margin, there's still some effect, I think, that can be gained.
Okay, let's take a hypothetical here. Aggressive printing of money to get the US economy going again. What would the impact of that be in Asia?
Well, it's a bit tricky for Asia because obviously a lot of that money would eventually head into Asia because here the prospects are bright, and it does fuel inflation in this region. And
which is a big problem right now.
It's a big problem. In Hong Kong, for example, we have inflation of 7% currently. So that would be a worry for Asian policymakers, that more and more of that money would come into Asia and just stoke inflation. So, but that's obviously not something that Ben Bernanke has to worry about at this moment in time as he delivers the speech.
Certainly won't impress the Chinese policymakers if he does
No.
that. Okay, Fred, as always, thanks so much for coming in.
Thank you.